My guest today is Uri Ferruccio. Uri is the co-founder at Concordia, a first adaptive risk layer that mitigates risk for all of DeFi. He's also, I think, a founding partner at Tabiya Capital. We'll talk about that as well. But firstly, welcome to the show, Uri.
Thank you very much. It's a pleasure to be here, Andy.
Pleasure to have you here, Uri. Let's do what we do at the beginning of the show. It would be super cool if you could please introduce yourself. Love to hear some of your personal and professional backstory. Yeah, what have you been doing in the lead up to getting involved in the wonderful world of DeFi?
Well, let's just say I'm a work in progress when it comes to DeFi, even so I wouldn't want to overstate that. But yeah, it's an interesting question for me because in some sense, my life is now relatively simple or focused in that I get to spend most of my time doing something that I really enjoy, which is either researching or building or investing in interesting technologies, mostly AI and crypto technologies, but generally we think of it as sort of innovative data technologies more broadly. And some of it touches on other things too. And that's pretty simple. As you mentioned, I do it on the building side mostly through Concordia, which is a project that I co-founded. And then on the investment side, it's Tabiya. But previously I tried my hand at a few different things when sort of trying to work out maybe what I really like to do, what my superpowers are. To some extent, what impact do I want to try and have on the world or on people? And I think one thing that I was fortunate to do is I was able to follow my curiosity. I think in some sense, curiosity has been a bit of an outsized thing for me because I actually grew up in rural North Carolina. I was homeschooled all the way until college in a log cabin in the woods in North Carolina. And I think that I reacted to that when I finally got to college and started meeting people from all over the place, including New Zealand, turns out. I got really curious to see as much of the world as I could. And luckily, that could lead you in a bunch of different places, but I think I gravitated towards working in really high talent density places. And so I was fortunate to be able to work at a few different really, really good companies, including the D.E. Shaw Group, which is a kind of a multi-strategy investment and scientific research company, very widely known for being where Jeff Bezos worked before he founded Amazon. I also worked at JD.com, helped to found their AI division. There's something like the Amazon.com of China. And then I worked at Binance, which everyone here will probably be familiar with. It's the largest exchange in crypto, and I was a vice president there and worked for CZ. And, I think that ultimately what I realized in working for these big companies was that a couple of things about myself that ultimately led to where I am now, which is I like to learn by doing, which works a little bit better in entrepreneurship sometimes than big companies, depending on how you do it. I like to go where the growth is. I think that's what led me to China. It's what led me to AI and crypto. And I think probably, entrepreneurship gives you even more opportunity to really be in the coalface of that. And I really, probably more than anything, I like to make things or even help other people make things. That's probably the thing I enjoy the most in the world outside of my children or something like that, shall we say. And I think that getting to be a founder and an investor, it's great for me because I like to get stuck in, regardless of whether it's my thing that's getting made or somebody else's. So that's a bit about me and kind of how I got to where I am.
Yeah, thank you, Uri. That's a fascinating backstory. I suppose you've certainly been, as you've identified, kind of in the right place at the right time is one way of putting it. But yeah, I mean, it's great life strategy really is to kind of follow your passion and go where the action is. And certainly, that describes China, describes AI, certainly crypto and Binance for a while there. Slightly different story with Binance now, but of course, I guess they're still the number one exchange across crypto, and that's obviously set you on the path to what you're doing now with Concordia. So let's talk about Concordia first, Uri. I can see it's kind of like a little bit at the intersection of crypto and AI, which is a very interesting place to be. but please give us your high level vision of what Concordia is.
For sure. It's an evolving vision in the sense that, a lot of times you'll start out trying to solve one problem and it'll lead you to even more fundamental problems. I guess you could say that our mission is to build infrastructure that makes finance writ large, probably not exclusively, even DeFi, hopefully in the long run, more free, more fair, safer, and more efficient. Just make it better. There's obviously a lot of room to do that if you're working within the constraints of blockchain technology, because there's still a lot to be done. Now, what we focused on for the first year and some change that we were building was specifically on how do you make digital assets safer, kind of at the asset level, if you will. And what we did is we ended up identifying that a lot of the ways that collateral is managed, things like the way that margin is calculated and so on, if you compare it to traditional finance, it's done in a much more static way than the current state of the art. And so we spent some time building the first truly dynamic collateral management program with the help of a gentleman who at the time was leading quantitative risk infrastructure for one of the leading traditional exchanges in the world. And so we sort of looked at the gap between how they deal with assets and how they're dealt with in crypto, and we tried to build something that was more dynamic and better. And that kind of ended up being a journey that led to a couple of spinouts from Concordia that are actually building at the application layer in DeFi, and some other things now that are building on top of it. One of them, called Superposition, is actually a really exciting point because it recently came out of public beta on Aptos. And it did that because after Japan hiked interest rates, there was a bit of turbulence. And we finally had a chance to kick the tires on our dynamic risk model, and it did really well. There were some other analogous types of players who lost a good bit of money, actually, in that turbulence. And so that led to us getting a bit excited that it passed that stress test, and it led actually to the Aptos Foundation doing a special deep dive and giving this permission to have a higher leverage ratio than other players. And so it's really cool just when you see something even as simple and small as that, getting to the point where it's showing that it's efficacious, and so on and so forth. So that led to it growing by about 20x in a week, which is cool. And so we're very happy about that and looking to hopefully continue that growth. But ultimately, the next thing that we're looking at is in that sort of category, which is this DeFi ecosystem that grew out of our first year's work, is what can we do to actually make on-chain yield more sustainable? And so there's a project that's building using some of our leverage and risk infrastructure that's hoping to enable that to, let's say, to be much more sustainable for a very anticipated layer 2, which is going to launch mainnet very soon. That being said, these are all things that are building on top of Concordia. In that sense, you could almost think of them as things that are using Celestia for data availability. Concordia spent its first year building really APIs that have certain utilities for risk management and so on and so forth. The thing that we realized in the course of that first year, though, is actually there's another level of risk that you could think of as infrastructure risk. And what got me really fascinated about that is, number one, just being super frustrated for a year that we're building this risk stuff over here, but what we're doing doesn't touch a hack or a depeg or some infrastructure level problem, which is probably much scarier even than what we were tackling. But the other thing that got me really excited was that for what we were doing for the first year, AI is not incredibly easy to apply because you actually want your risk models to be deterministic and predictable and explainable. People don't really like it if they get liquidated inexplicably, nor do regulators, I'm told. But when you look at infrastructure level risks, transactions that, are due to a wallet hack or whatever it may be, it's actually full of great use cases for modern AI. And so the thing that we're really looking at now is how can we create a novel data set that will enable us to ultimately do really interesting things that use AI to optimize blockchain infrastructure itself. specifically pre-confirmation blockchain transaction data. In that period from when the user first displays intent to want to go do something like a trade, and the whole journey through, let's say, the wallet, and then through the pipes that get transaction data, to nodes, and then ultimately through the different layers of, what people call the blockchain stack, right? Or the consensus and execution and so on and so forth. And we think that there's a huge opportunity to intelligently optimize many things in this area. And I would compare it actually to cars in a sense, right? Back in the 1970s, I'm told, you had perfectly usable cars, but they had no computers in them. I don't know how many computers are in a Tesla or even a modern Audi, but it's a lot actually. And we believe that in a similar way, there's a huge amount of optimization that can be done for blockchain infrastructure using AI. That's one of the areas of AI that I think is genuinely not overstated in terms of how it can do something interesting with blockchain.
Yeah, thank you, Uri. I've seen you talk about this before. So you're talking about infusing a blockchain with AI to kind of create what you describe as, I guess, like an intelligent layer that acts as the brain for blockchain infrastructure. So just maybe to talk us through, a couple of reasons or use cases, probably a better way to describe it, as to, what people could do with that data and how AI enhances what we have already.
Yeah. First of all, I should note that I first started looking at blockchain and AI back in 2017, and I'm fairly sure that everyone who was talking about those two things together then was trying to sell you an ICO token. And so it wasn't super interesting from a technical perspective. I tried, actually. I was in the AI division of JD.com at the time. That's how I got into crypto in the first place. So we genuinely tried, but there wasn't much to do. I think that the way that both technologies have matured since then, changes that. And there's still a lot of exaggeration. Actually, there's a lot of exaggeration just about AI and blockchain in general. From an investment perspective, I can definitely tell you I feel that very strongly. But as a builder with that hat on, I think it's really exciting to think about how you can get past some of the current challenges and limitations around blockchain infrastructure if you're able to intelligently optimize different parts of the data transaction value chain. So one simple one is latency. One of the disadvantages that blockchain infrastructure has compared to traditional centralized infrastructure is there's a lot more latency, right? If you look at the speed at which high frequency trading happens in traditional finance, it's just orders of magnitude faster than blockchain. One of the things that you can do, though, is if you're able to actually get a data set that is large enough and disparate enough to be able to start identifying patterns, particularly using modern sort of more implicit models, things like self-supervised learning or the types of stuff that undergirds the ChatGPTs and the Claudes of the world. You can start, in theory, creating much better prediction that would allow you to infer certain likelihoods about what the next, block, the next state of the blockchain will look like after the current transaction, data that is, let's say, still at the wallet or at the RPC node, or even theoretically in the app itself. If you have access to that data, you can potentially infer things about what will get confirmed on the chain. And so from a latency perspective, this opens up the potentiality of effectively reducing end-to-end latency. And that's something that would be genuinely useful for all kinds of use cases, and also just for making this stuff less disadvantaged versus legacy infrastructure in finance, for example. But if you think about this as an opportunity to effectively capture and analyze an enormous kind of amount, hopefully an enormous amount, a significant amount anyway, of user interactions with the chain, which means, people who are going and doing stuff with wallets that are sending, either literal financial transactions or just, messages that are going to end up changing the state of the chain when it rolls over to the next block. If you can actually capture those, and you've got a model that can do a decent job of analyzing them in useful ways, and then in particular, if you can then do it quickly enough that you can append metadata to those transactions before they go into, kind of the processing, part of the blockchain process, the consensus and execution and settlement. You could theoretically do what you might call co-processing or pre-processing. Or you could at least tag data in a way that would allow other people to do that. And that opens the potential to, for example, identify spam transactions on Solana or other very low-cost, high-speed chains where spamming is kind of in the interest of certain types of arbitrageurs to do. And basically allow those spam transactions to be separated out before they clog up the system, so to speak. And this has obviously been a problem at times for Solana. It actually was a problem recently for Ton as well, because they had a really, really popular coin that just led to a massive increase in utilization. That's one thing you could do. But you could use this really for optimizing how sequencing is done. You could use it for anything where it would be useful to identify attributes of certain transaction data and allow them to be classified and then treated differently in some way, if that makes sense. But I think that if you were to take a step back and look at it from the perspective of traditional finance, people are starting to think about order flow for the first time in a more kind of holistic way when it comes to blockchains. Really, all transaction data is in some sense order flow. Some of these transactions are financial in nature. Some of them are not. Some of them are just information getting stored on the blockchain. But the flow of those transactions is an opportunity for optimization, just as there is with any kind of data flow that has to be processed in a certain order, right? There's a lot of stuff that we're just scratching the surface of, and so I've probably gone already partway down the rabbit hole. But hopefully that was at least an overview of the ways that AI can kind of just increase efficiency, and then other things like fairness, for example, because there's a lot to think about in terms of what's the fair way to order transactions. It has a lot of implications for who makes money and who loses money, for example.
Absolutely. Thank you, Uri. Well, look, for people that want to learn more about Concordia and what you guys are building, just tell people what is the best place for them to go, what should they do, where should they go, and also just maybe identify the kind of the groups or target users who are best placed to take advantage of what you guys are building. Who are you building this for, Uri?
Absolutely. So I think for people who want to go and play with something that's live, engaging with superposition on Aptos, which is a borrowland that's building on top of Concordia, is probably the best way to do it if you want to go use something which is in production or on mainnet, as they say. And for that, I think it's superposition.finance. You can go and check out the website. It's on Twitter and so on and so forth. We also have a friendly fork of that the team is building called Move Position, which is on testnet on Movement Labs. And that also is something that people can go and play with and so on. And soon there's going to be another project also building on Concordia called Canopy on Movement Labs, which is it's not out there yet, but it's something where people are interested in movement or in general the Concordia ecosystem. Happy to chat about it. Concordia itself is keeps a pretty low profile. It's pretty focused on building the infrastructure, but we're always happy to chat with anybody who is interested in comparing notes or learning more. And you can find us on Twitter or admin@concordia.systems.
Fantastic. And of course, links are in the show notes, folks. But concordia.systems. Uri, I saw in your bio, and you talked about it a little bit. I think you hinted that you kind of, social impact or those kind of values are important to you. I think your parents were environmental activists even. So I guess, you've perhaps had those kind of values instilled in you. This is kind of a segue to Tabiya Capital, and I'm not sure whether those two things are related or not, but just kind of interested in your, I suppose, investment thesis. What is the thesis behind Tabiya Capital, and how do you think about kind of investing in the world and the kind of impact that it is possible to have, kind of good, bad, financial and otherwise?
Great question. My parents once told me that I can do anything in the world from their perspective without them being unhappy unless I become a lawyer for DuPont, which is a known chemical company.
Yeah.
I followed a different path to them. I've always admired, actually, the level of commitment they've had to a very tangible and definable type of social impact. I hope that, for me personally, I think it's the potential for technology to make things in the world substantially better and more efficient. That's been my version of that so far. And I hope that I can translate that even more tangibly over time. Tabiya, I think, in some sense, is an acknowledgement that we live in a world where technology is now so complicated that actually it can be quite difficult to do something like that. I think the barrier to becoming a true expert in many of the areas that are the most impactful and interesting for us, from health technologies to environmental technologies, even to AI and blockchain, these are all things where people who are doing the most interesting versions of it, they spend their entire lives really focused and specializing in these areas for the most part. But, I started my career working for this thing called the Center for U.S. Global Engagement, and it was chaired by people who are on the opposite side of that table. If you think of the innovative creators on one side, you've then got people who've got power and resources and big problems to solve on the other side. And they specialize in other things. They specialize in the things needed to get where they've gotten. And so I realized after an experience in Washington where, our co-chairman were a couple of former secretaries of state. I had the pleasure of working pretty closely with former Secretary Colin Powell. We spent a lot of time with people who are allocating resources to solve problems that they don't truly understand the solutions for in terms of the really innovative technical stuff. So even as I went deeper and then I worked pretty closely with David Shaw at DE Shaw, who's the founder and a very successful guy, very intelligent guy, science advisor to a couple of presidents. Had some exposure to the founder of JD, and then I worked reasonably closely with CZ at Binance. And all of these people are ultimately, they're innovators, but in their current roles, they are people who are allocating or can allocate massive resources. And so those experiences were in my mind, even as I personally went deeper and deeper into building product myself, into going deeper into building certain types of innovative products myself. And over time, I realized that there's a whole wave of what we've been calling emerging technologies that are starting to emerge, if you will. In 2016, 2017, that's when transformers, this sort of architecture for AI that has really accelerated large language models, those came out and people were playing with them. They were the proverbial, nerds in the garage, over the weekend. They were in that stage. Now, look at ChatGPT and Claude. I mean, it's pretty transformative. And a couple of years ago, I started seeing statistics in things like PitchBook and Preqin, which are kind of investment, data analytics companies, that the ROI on investing in what's classified as a deep tech company, the time to, value, which traditionally had been much longer than investing in like a SaaS company, was actually shortening to the point where it was predicted within a couple of years they would be parity. And I think it's because we're at a point in this technology cycle where you're seeing things come out of the research lab and start to get integrated into real business. But it seems like there's a difference, and this is kind of the core thesis for us. It seems like there's a bit of a difference in this phase of technologies and maybe previous ones, at least in terms of degree, in the sense that the next generation of pharmaceuticals, of healthcare, of so many different types of technology, it seems like the barrier to entry in terms of really understanding them and being able to invest in them is really high. And also the world is so much more global that you're seeing really high quality opportunities pop up in different places. So we realized, kind of in partnership with a longtime mentor who's one of the founders of the fund of funds industry for one of the world's largest countries, that we thought there'd be an opportunity to actually do a better job of giving people indirect exposure to the most amazing technologies, the most promising technologies on a global basis by selecting the best funds that are investing in them. So fund of funds are an interesting game because many times they're not that efficient. They're an extra layer of fee, right? that you don't necessarily have to pay if you invest directly in these in the fund itself. They're only really relevant when they're solving a big problem for the asset allocator, and usually it has to do with access and understanding. And so we decided to found Tabiya as a fund of funds and fund because we got a lot of feedback that people are interested in help getting exposure to these technologies in a way which is safe, and also in a way where they can learn along the way. And that's why we're actually going to do some direct investing with about 30% of the capital. We're going to do it in a way where we'll put in relatively small investments, and we will enable our partners and supporters to co-invest if they decide to. And we'll do our best to actually create opportunities for them to learn with us when it comes to these opportunities. What we realized as we did this, though, is that if we did it only in crypto, we didn't feel comfortable that we would be able to deliver risk mitigation through portfolio diversification. And that's because crypto as an asset class is so correlated. And so we decided to make it about 30, let's say 33% crypto, 33% AI, and then the rest kind of opportunistic with a focus on data technologies writ large. And this allows you to kind of, and probably the majority of our direct investments will be in crypto and AI because we believe that's where the outsized returns still are. But it will allow us to kind of offer some risk mitigation through exposure to different, somewhat less correlated asset classes and assets. And I think that's exciting because I still do believe that although crypto native monetization, shall we say, is still, I think, the main focus of many people in crypto, you are starting to see many more signs of utilization of this type of technology in use cases that people could call real world, or they're useful in some way. So that's kind of how we went about this, and we've been working on it for a couple of years. We didn't want to kind of do it in a way that would be not fully prepared, but happily we've gotten there, and we've I think set it up in a way where we are really excited about the experts and the funds and the ecosystem that's growing around it. So
fascinating indeed. Thank you, Uri. All right, look, as we start to finish up this part of the podcast, then please just again feel free to tell people where they should go to learn more about Concordia and that kind of DeFi side of things. And if I don't know if you have much in terms of public facing information on Tabiya Capital and whether you're open to people kind of investing there or if it's a closed fund or not. But yeah, just briefly explain that as well, if you like.
For anybody who's interested in learning about Concordia, I'd love to direct them to start by taking a look at Superposition on Aptos and Move Position on Movement Labs. Those are both easily findable. But you can go to superposition.finance or moveposition.finance to find them. For Tabiya, we've just started talking about this kind of outside of our close circle. And so I would say if you're interested in learning more about this, you can email me at uri@tabiya.io. That's Uri, URI, at TABIYA.io. And we're obviously happy to take questions, constructive criticism, crazy ideas. We're definitely keen to collaborate.
Excellent. Well, speaking of crazy ideas, Uri, it is time to finish up the podcast, and we do that by running you through the crazy idea-filled crypto conversation hot take round. Are you up for it?
I am up for it.
Excellent. Just going to run some questions at you, Uri. Just want you to give me, your crazy idea-filled hot take style answers, if you like. Let's see what you have to say. Question 1 for you, Uri, is where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Multi-chain opportunist. I feel like the word opportunist makes that a bit of a loaded one, if I'm not misinterpreting it. I think I'm in the middle, and that's not the easy way out, in the sense that so far anyway, Bitcoin seems like the most likely source of really, really solid security. And so I'm really excited to see that the Bitcoin L2 space is growing, and there's a ton of innovation happening over there. I do think that you will see multiple chains win, and you can have a long debate that isn't relevant to a hot take about which one those might be. But I do believe that there's no single chain or deployment of a single chain's technology that's going to meet all of our needs. And also, you're going to see some chains get user bases, fan bases, customer bases, and they'll keep those. That's just how life works. So yeah, I used to own a Bitcoin mine. I do like Bitcoin, but I wouldn't say that I'm fully maxi.
Makes sense. Thank you, Uri. All right. Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So, whatever you like here, but I suppose, DeFi, AI, crypto, blockchain, combinations thereof, what does it all look like in 10 years' time?
I mean, the first thing that you reminded me of is what Bill Gates looked like when we were helping him with government relations, because I sort of worked for him indirectly in my first job. The second thing that you maybe think about is another thing that I read, which is if you go to resilience.com, I haven't actually checked this yet, but supposedly it redirects to Amazon because that's how much Jeff Bezos believes that resilience is a superpower. And I think that resilience is a superpower in DeFi. I know a lot of people who are almost unreasonably talented who are in DeFi and probably could make a lot more money than they're making in other places. They're doing things the right way. They're building innovative products that are high quality and so on. I do believe that some of these people will end up doing really well. They'll make substantial achievements, contributions, and I think that they'll probably get substantial recompense. And I do think that it's probably going to be a lot sooner than 10 years if you look at sort of institutional adoption. The key question, though, is if you're a DeFi person, is what can I build that will actually have value that stands alone or could be acquired rather than just rebuilt by big companies. I think that's actually probably the most.
Yep, makes sense. All right. Another great quote, Uri, you'll be familiar with this one, comes from sci-fi author William Gibson, who said that the future is already here, it's just not evenly distributed. With that in mind, can you think of an example of the future being here right now, but most people aren't aware of it?
So there's a company that we've invested in, which it's like the platypus of fintech. If you just look at it sideways, it's a bank. It also has the ability to automatically create contracts and update contracts, and it also has the ability to create entities, as in operating entities, LLPs, LLCs, and so on. And it sits underneath a chatbot interface that basically makes it sort of the beginning of an operating system for your business. And it's founded by a gentleman who was, I think, the first employee at Stripe. So he knows way more about fintech than I do. When I first heard about it, I thought to myself, that reminds me of a platypus. Like, why are those things combined? That makes no sense. And then we took a look at it and we got so bullish that we got involved. And he's now got over 300 million, AUM in his Mercury Bank-like, B2B banking product. And I genuinely think that it looks like the nerve center of a Star Trek version of a company. And you can sort of extrapolate out how if you add different things, this Facebook feed that you get, which currently, only shows your banking information and your contracts, whatever, like it could be the first and best place for you to kind of just manage everything about your business. I remember seeing something about how A16Z or some big fund thought that now it's possible for there to be a one-person billion-dollar company, a one-person unicorn for the first time, because automation is getting to be so sophisticated. Well, apparently there's now an operating system to help you do that, and that does feel like the future being here, with most people not knowing it.
Absolutely, that's a great example.
It's called Mass, by the way. Mass.build, I believe, is the website.
Fantastic. Thank you for sharing that. Great description. Great Yeah, great selection. And look, it really does tie in very nicely, Uri, with the final question, which is, what is your favorite piece of sci-fi? You can choose a book, you can choose a movie, choose a TV. Yeah, selection of science fiction, Uri.
That's an easy one. It's a book and it's a TV series. It's called The Expanse. And I
Yes,
actually convinced my wife to name my second son in part after the lead character, James Holden. My son's name is Holden. For her, it's Holden Caulfield from Catcher in the
Catcher in
Rye.
the Rye.
For me, it's
Yeah,
always going to be James Holden because I think The Expanse is absolutely, close to the best thing ever. So
nice.
if I
Yeah.
said something else, he'd probably kill me in the future if he ever saw this.
No, love the Expanse, and yeah, it's funny. I was watching Mindhunter earlier this week, and one of the characters' names is, I think it's Ford Holden or something like that. So yeah, something about Holden. Look, Uri, this has been a lot of fun. Thank you so much for coming and spending some time with us on the show. Again, just to close it out, tell people where they can find you on Twitter, on X, wherever else you like to hang out online. And look, feel free to shout out the various websites for any of your properties again as well.
Absolutely. I'm at Uri Ferruccio on X or Twitter, very imaginatively. You can find me on Telegram at UDF111. Although I'm going to change that if too many crazy people come after me now. And for Concordia, you can find me at Uri at Concordia.systems. And if anyone's interested in chatting about Tabiya or the capital allocation side of things, it's Uri at Tabiya.io.
Awesome. Thank you so much, Uri. All the best, and bye for now.
Thank you, Andy. Huge pleasure. Cheers.